Welcome back, folks. I am Jon Najarian, and you are tuned in to 3 at 3. And every business day at approximately 3 p.m. Eastern Time, we bring you unusual option activity. Today's unusual option activity is for Monday, the 11th of July. And unusual option activity is large purchases of call options, which we deem to be bullish, and large accumulations of put options, which we would say are bearish. Now, we commit our own capital here. You have to decide if it's appropriate, if you understand risks, because options are indeed a wasting asset. So as much as I love them, I don't want to talk people into trading options that aren't familiar with both time decay and volatility, because both of those can impact your investment. And if you'd like to make it an investment, which you can do with options, I definitely would be a person that favors spreads over straight out naked call or put purchases. And I almost never do naked call or put sales. But again, it's your money. You have to decide the appropriate risk for you. Here was me last week talking about recession fears, and obviously those fears are still very high as we're anticipating a inflation data, that's Consumer Price Index, CPI, that comes our way Wednesday of this week. So the 13th of July, today's the 11th, 13th of July at 8:30 in the morning Eastern Time, 1 hour before the market opens, we will get that data. And the market will rock and roll on that data. That data will determine whether we go significantly higher, if it's very benign, or whether we go significantly lower because it's too hot. Goldilocks and the three bears, not really. We need either a reading that shows that we backed off significantly from that nearly 9% jump that we saw last month, month over month, or we're going to have to get ready to batten down the hatches and head to the downside if the number is hot, because that will mean the Fed has to hit us hard with multiple rate increases in that 0.5 point to 0.75 point range, rather than maybe letting data dictate their next moves. So we're hoping that they are indeed data dependent. We're hoping the data is not as hot as it was in the previous month with the May reading. With that said, I hope you can join us, those of you who would choose to, September 21st through 24th in Dallas, Texas, at the lovely Four Seasons Hotel. This is in Las Colinas, just part of Dallas suburbs, and fabulous hotel. It's going to be a great time. And we've got 2 days of live trading, a bunch of great speakers that'll be coming. I hope you come. I hope you're able to attend. And if you do it in the not too distant future, you'll be able to join us in person. The rest of you will have to join us via Zoom, which is still great. And all of our attendees will get a copy of all of the recorded seminars that we give during that 4-day period. But if you'd like to be there in person, you've got to go through marketrebellion.com/Dallas to attend. That's marketrebellion.com/Dallas. All right, let's take a look at this. Looking around at IYR, this is a real estate ETF. What kind of real estate? That's why I put that list, because those are the top, 7 different, that accounts for almost 40% of that ETF, the IYR. So they're buying upside calls. These upside calls are in American Tower. You know what they do. They operate cell towers. Prologis, this is storage. So just as you see public storage on that list, I wouldn't say that this is necessarily the recession portfolio, but certainly when people are forced to stay in their dwelling longer, they end up, rather than pulling stuff out of storage, staying with that stuff in storage, which is good for Prologis and good for public storage. There's Digital Realty Trust, Simon Property Group, Equinix, Crown Castle International, another tower company. You get the idea. These are things that we're going to use even if we are moving into a recession. I'm not saying it's the ultimate recession portfolio, but some people could make that case. And with it just shy of 93 and 8,300 of these 95.50 calls trading that are just less than 2 weeks into the future, that's a bet that we go higher, lower left to the upper right on the screen. That is the first of today's 3 at 3, the IYR. Then we've got our option oracle, AJ Monty. I want to encourage you, because so many of you have written to me, texted me on Twitter or other social medias. I just love what AJ does. Let me show you just 10, 15 seconds of this. This is part of Market Rebellion on YouTube. You get it for free. This is what it looks like.
Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Invesco QQQ Trust, which is ticker symbol QQQ, tracks the NASDAQ market tech sector. And if you're brand new to this.
So what I'm pointing out here with AJ, folks, is he breaks down these charts. It's his weekly report. You can get it for free by going to marketrebellion.com. on YouTube. On the YouTube channel, we have our own. Some 28,000 of you are subscribers. Again, it is completely free, and you get AJ's insights into what the market is going to do. He has been uncanny about his read of the charts. He is a CFA and just a super guy, but also really breaks it down and makes it understandable where he thinks it's going, each of these charts that he breaks down, bullish or bearish, and he leaves the lines up on those charts for the following weeks. You can see how he did. Very interesting character, and certainly something worth paying attention to, our own option oracle. All right, next one. This is Halliburton, HAL, oil field service. Take a look at where it was the end of June. It was $33 a share. Fell all the way down to $28.50 level. Pretty substantial drop, $5 for a $33 stock. You can do the math. Now it's back up to $29.18, and they're buying the 30 calls that expire at the end of July. So these are not calls that expire this week, the 15th, or next week, the 22nd, or the 15th is next week. I apologize. My tongue is moving faster than, anyway, the 15th, the 22nd, the 29th. These are nearly 3 weeks into the future. Halliburton bullish call buying at that 30 call strike. So watch those. If you're of a mind to trade it, I am bullish on this oil service stock. SPY, this was some pretty bearish activity again today in the SPY. People buying at that 384 strike because they're buying the 276 puts. So these would really jack in value if indeed we do get a hot CPI this week. These options expire next Friday, the 22nd, not this Friday, the 15th of July. So 27,000, that's 2.7 million share equivalent of a 384 point index. So you can do the math. That's a big trade. I want to be on the side of big trades like that. But did I buy these 376 puts? No. I buy at the money and I sell a lower strike against it because that's how I like to play. So again, IYR, HAL, and SPY. Those are the three today that are our unusual option activity. If you'd like to join us tomorrow, by all means. Choppy markets and momentum trading, why don't you join us tomorrow? Free webinar over at over at marketrebellion.com. July 12th, 4 p.m. Eastern Time. That's July 12th at market close, 4 p.m. Eastern Time. We'll be addressing those choppy markets and how to trade the momentum that you get. You can get it for free, even if you can't join us, folks. If you sign up, we will send you a copy of the discussion. It'll probably run 45, 50 minutes, and you can be part of it live, or if you can't attend, you still get a copy of it in either case. So check it out. Free webinar tomorrow. Just go to marketrebellion.com to sign up. And that's going to do it for us today, folks. I hope you enjoyed the show. I hope you tell a few friends about it, and that you join us again tomorrow back here for more on the Market Rebellion Television Network. Bang. See you then.